So hello everyone and welcome to Moementum channel. My name is Mo, and in this video we are going to review the company 𝗖𝐋𝐈𝖖𝐊 Royalty Corp and review its stock and know more about the option for dividend investors, especially those of you dividend investors here in Canada, whether this is a good call for you in terms of investing or not. So 𝗖𝐋𝐈𝖖𝐊 Royalty Corporation is a franchise company delivering obviously pizza, as the name suggests, and they are function under two main brand names, 𝗖𝐋𝐈𝖖𝐊 as well as Pizza 73. And the company has been founded for over 50 years ago. It is actually listed on Toronto Stock Exchange and does pay a monthly dividend. So that's something that for many of dividend investors might be of their interest. So let us take a close look at their last quarterly earnings, see what we saw in there and whether the numbers are promising or not. As we know, of course, 𝗖𝐋𝐈𝖖𝐊, probably similar to many of the consumer discretionary sector companies, was hit as a result of the pandemic. For instance, if you look at it, their same-store sales decreased by 17.6%. It is, of course, mainly due to the impact from the pandemic and the impact on the clients walking in the restaurants. As a result of that, the sales has gone down through that lens, though they have tried to offset that through some of their delivery services instead. Nonetheless, there are some other news in terms of highlights for us to take a look at. For instance, their working capital reserve has increased by about $700,000 during the quarter to reach 5.4 million at the end of December last year. Also, they are maintaining a payout ratio of 84% roughly in the year. It might be high, but keep in mind they are also paying a monthly dividend in their structure that they're formed, and they have enough earnings to cover for the dividend income, the dividend amount that they are paying to their shareholders. If we look over to Simply Wall Street and take a closer look in terms of the different elements of this company, among some of the highlights is the fact that the company is trading at 2.7% below the estimated fair valuation. Their revenue is forecasted to grow drastically over the upcoming years, and they are paying currently a dividend yielding about 5.9%. This is despite the fact that they've actually decreased their dividend. So for those investors who anticipate, for instance, that 𝗖𝐋𝐈𝖖𝐊 could be back into its normal groove in terms of the sales and revenue, potentially with that they might continue to go back to their previous structure of increasing the dividend over time, and that could result in a much better dividend yield on cost basis for you. But nonetheless, 5.9% seems to be a very decent amount to begin with anyway. All right, if we look further, you notice here how the stock price has changed over the span of the past 1 year. The maximum price that we've had and seen was at $10.65 Canadian dollars. And as I mentioned, the company does pay their dividends every month, and we're going to look at it more closely as we get over to the dividend section. But let us take a look at the past market performance. So you notice that the past 7-day return for 𝗖𝐋𝐈𝖖𝐊, ticker symbol PZA, is showing 1.1% return. And if you compare that to the hospitality here in Canada, that 7-day return was actually down by 0.7%. And for Canadian market as a whole, again, it was down by 0.7%. So in comparison, 𝗖𝐋𝐈𝖖𝐊 has done well over the span of the past 7 days. For 1 year return, they have gone back up drastically from the pandemic lows, and they're showing a 1 year return of 29%. Whereas for the Canadian hospitality sector, it was at 38.7%, and for the Canadian market as a whole, it was 39.7%. If we go down a little bit further in terms of the long-term and price volatility for the stock versus the market, 𝗖𝐋𝐈𝖖𝐊 seems to be less volatile compared to the industry as a whole. So that's always more positive, especially for investors who do not want to see a lot of volatility in the stock price. In terms of the valuation, of course, the stock price has grown much higher since several weeks ago. It is currently trading at about $10.60 $0.60 at the time of making this video, and the fair valuation for that is more so at $10.90. So it's only an upside of 2.7%. If you look at the price to earnings ratio, and this is definitely one of the important metrics that many investors would like to take a look at in terms of how expensive the company is in terms of its price and valuation when you compare it to the earnings that they already have. So for the company itself, the PE ratio is at 13.9 times. That's a multiple that you would be paying if you bought the stock at this current price, whereas for the industry, it is showing at 26.6. So it is less pricier if you compare it to the Canadian hospitality industry. And if you compare it to the Canadian market as a whole, the price to earnings multiple is at 17.4. So again, Pizza is a good value based on the comparison to the Canadian market. In terms of the earnings per share, you'd see how since the beginning of the pandemic, the earnings per share for the company has drastically been impacted. That said, the company is still profit making and they have a positive earnings per share. The company is showing $7.83 million in terms of short-term assets or their current assets. And if you look at their current liabilities, it's only at $2.44 million. So in other words, your current assets exceed your current liabilities. That's always a good sign. And same story applies for their total assets in comparison to the total liabilities. That again is a very positive sign, and they passed that test. One thing that is being flagged here is that Pizza's short-term assets do not cover their long-term liabilities, but I don't think that's necessarily something we have to worry too much about because those are long-term liabilities, and you don't necessarily have to have enough current assets to be able to cover that, but it's just a little bit of a flag for us to be mindful of and aware of. In terms of the dividend, as I mentioned, the current dividend yield is at 5.9, which compares to the market bottom 25% for in Canada. It's much higher. The bottom 25% of dividend payers in Canada market have a dividend yield of about 1.5%. The market top 25% have a dividend yield of average dividend yield of 4.7%, and the industry average is 3.1%. So overall, this beats all of those levels, and it's very positive for us. What was really positive for me is looking at the insider trading according to the Simply Wall Street data. So based on these numbers, I don't see any shares sold by the insiders of the company, but rather I've seen them that over the span of the 3 to 6 months as well as 9 to 12 months, they've actually bought shares. So that is a positive sign for us to take a look at and know and be aware of. In terms of ownership breakdown, if you look here, you'd notice that majority of the shareholders are general public. In fact, about 61% belongs to the general public. We have a size of about 13.7% of investors that are institutional investors, followed by 23, of course, 0.5% private companies, and individual insiders is only about 1.9% of the shareholders. Here's a look at the top shareholders for the company and to be aware of. As you can see here on the monthly dividend growth, the company actually increased their dividends 7 times prior to the beginning of the pandemic, and those percentages you see, but as a result of the pandemic, they had to drastically decline their dividend. In terms of the dividend yield, though, it is still at a decent 5.9%, but for those of you perhaps who had owned shares of Pizza perhaps before the beginning of the pandemic, that I would imagine would have been a major cut and also huge impact in terms of the price of the company. You notice that the Pizza Royalty Corp, or PPRC, declares a monthly dividend to shareholders, and their current monthly dividend is set at about 5.5 cents per share, or about 66 cents Canadian dollars annually. They have the breakdown. What was of interest to me is that if you go back to 2016, you could see how their monthly dividend was paid. It was hovering around 7 cents per month. In 2017, again, it was around 7 cents. 2018, continuing the amount, about 7 cents. 2019, around the same amount. You could see again 7 cents, almost similar amount. In 2020, the amount was again the same, though they started, as you notice here, as of April, to decline that dividend. In fact, April 2020, that's when they stopped their in fact, as of April 2020, you notice how their dividend amounts, monthly dividend, went down to only 5 cents. Nonetheless, they did not pause their dividend, so they still maintained their monthly dividend payment. The only thing is that the amount of dividend went down. That being said, they increased the dividend back from November of 2020, and it was paid in December, from 5 cents to 5.5 cents, and in 2021 so far as well, you're seeing that they're maintaining that 5.5 cents dividend per share. If we hop on over to tip ranks and see, based on one analyst rating, the expected target price in 1 year for the stock is at $11.99 Canadian. If that holds true, that shows an upside of 13.10% for 𝗖𝐋𝐈𝖖𝐊. Lastly, if you look at Yahoo Finance and the charts, you notice here how the trading volumes for the stock over the span of the past trading sessions is hovering around between 30 to 50,000 shares being exchanged. There you have it, folks. A quick review of the 𝗖𝐋𝐈𝐖𝐊 Royalty Corp and its companies and stock as a potential dividend-paying company to have in your portfolio, especially if we're here for Canadian investors and Canadian dividend investors. Let me know your thoughts about 𝗖𝐋𝐈𝐼𝐊 and whether you find it a decent dividend-paying stock to include in your portfolio or not. I would love to hear from you, and do let me know in the comment section of them below in this video. If you enjoyed this video, please be sure to give it a thumbs up, and of course don't forget to share this video with someone who might benefit from the video as well. Whether you're a pizza lover or a fan of dividend investing, don't forget to subscribe to Moementum channel, because here on Moementum we post weekly videos about stock market investing, finances, and financial freedom, and would love to have you on our journey here on Moementum. Thank you, and I hope to see you next time.